JP Morgan and Chase are sending out a clear warning to all investors regarding the recent dumping of Bitcoin for Ethereum amid the $150 billion Bitcoin crash. Also, it's official, the People's Republic of China has just banned all cryptocurrency transactions and mining in its country. Is this the end of crypto in China? Watch the whole video to get the full scoop on this shocking news report. But before we get into the video, please remember that this video is for educational purposes only and it is not investment or financial advice. Please do your own research before making any investment decisions. Now let's get right into the video. Cryptocurrency mining and transactions have been outlawed by the People's Bank of China, contributing to the wiping of $150 billion worth of value in the cryptocurrency market. Bitcoin prices fell sharply 4% from $44,107 to $42,254 on September 24. Many investors are concerned that this represents a glimpse into the future of cryptocurrency and what is to come of it. To fully understand China's recent ban on crypto, we must understand the context of the People's Republic of China's views on cryptocurrency in the past. Governments all over the world from Asia to the US and even China have been considering the risks of letting cryptocurrencies exist within their economies, fearing that these coins are undermining their control over their monetary and financial systems. Many governments cite the need to crack down on financial crimes and protect investors. China has been the most outspoken in their quest to eliminate digital currencies. A little context, the first time China banned cryptocurrency was back in December 2013. Since then, it has continuously scrutinized cryptocurrency, imposing sanctions and restrictions. But on September 24, China said enough is enough. No longer would any entity be allowed to use or mine crypto, and the penalties for doing such would be fines, imprisonment, or worse. A little history. Back in 2013, China claimed that Bitcoin wasn't a currency with real meaning. It banned financial institutions from handling transactions of Bitcoin. The result was Bitcoin prices fell sharply 20%. However, eventually, as we know, the prices have recovered. Then in February 2017, the Chinese government started imposing more restrictions, attempting to force Bitcoin to comply with its anti-money laundering rules, and strengthening its grip on the coin's use in its marketplaces. This led to prices of Bitcoin falling more than 7%. However, this effect was also very short-lived and the prices quickly recovered soon after. Following this, another restriction imposed by the Chinese government was on the 24th of August, 2018, where this time, around 5 bodies of the government, the People's Bank of China, the Banking Regulatory Commission, the State Administration for Market Regulation, the Ministry of Public Security and the Central Cyberspace Affairs Commission sent warnings against illegal fundraising using cryptocurrency and blockchain. However, soon after this was announced, Bitcoin prices rose roughly 4%. Fast forward to this year. On the 21st of May, China called for tighter security along with crackdown on the mining of Bitcoin, which again brought a serious hit to the market, but not for long. It seems that the battle between the Chinese government and cryptocurrency is never going to end. Finally, we come to just a few weeks ago, September 24, 2021. This time China said it has had enough and that all transactions involving cryptocurrency as well as mining of cryptocurrencies are now illegal in the PRC. China has announced that people getting involved in such cryptocurrency transactions will be prosecuted, and even foreign websites that provide such services to citizens in China are considered partaking in illegal acts. Several cryptocurrency companies and exchanges have already blocked all Chinese IP addresses and have declared that they will not be providing services to Chinese citizens. Will this finally put an end to the mining and the use of cryptocurrency in China? Will it result in a crypto black market? What sort of penalties will China actually impose on citizens or businesses that break the rules? This is a huge shift in the crypto mining community. Not only is China a leading producer of crypto mining equipment, but Chinese mining pools control more than 60% of the Bitcoin network's collective hash rate. So this regulatory change will trigger a huge shift in the cryptocurrency mining and infrastructure markets. With the bans that China has imposed to essentially end any circulation of these coins in their economy, the market for cryptocurrencies seemed a little concerned with prices slumping. However, history has shown that when regulatory changes like this have happened, prices quickly recovered. At the recording of this video October 14th, the price of Bitcoin has dramatically shot up to $57,481, representing a 36% increase since the news hit on September 24th. But what long-term effects will this have on crypto? What changes can we expect to see? After all, 60% is a large mining share of Bitcoin, right? What about the miners? Well, it's almost certain that most miners will relocate from China and move to more crypto-friendly places, most likely around Singapore or other neighboring countries where their crypto infrastructure will be welcomed. Following the announcement by the People's Bank of China, miners in the United States like Marathon Digital, Riot Blockchain, and Bit Digital experienced a temporary decline within the range of 2.5% to 5%. while the San Francisco's Coinbase Global Crypto Exchange faced a slip of just about 1%. All of which have now recovered. On October 11, J.P. Morgan Chase CEO Jamie Dimon reiterated his concern for cryptocurrency investments. He said, "No matter what anyone thinks about it, government is going to regulate it. They are going to regulate it for anti-money laundering purposes, for Bank Secrecy Act purposes, for tax," referring to banking regulations in a conversation held virtually by the Institute of International Finance. However, this hasn't stopped J.P. Morgan Chase from offering cryptocurrency products. Most recently, J.P. Morgan Chase has sent out a warning that large investors are moving money from Bitcoin to Ethereum amid a strong divergence in demand. Cathie Wood sees this as a positive. Ethereum is seeing an explosion in developer activity thanks to NFTs and DeFi, the chief executive of ARK Invest said last week, revealing her confidence in Ethereum has gone up dramatically. "I'm fascinated with what's going on in DeFi, which is collapsing the cost of the infrastructure for financial services in a way that I know that the traditional financial industry does not appreciate right now." Side note, if you're liking this video, please leave us a like, subscribe and hit the notification bell so you never miss another video about cryptocurrency. Now let's get right back to the video. Much to crypto investors' relief, this crackdown is not showing to have any effect on the global markets or interest. Crypto markets have completely shaken off the Chinese ban on cryptocurrency, and now even Twitter has just announced that it will facilitate crypto payments. It's apparent that people are not going to give up on crypto just yet. Critics warn that it's still very volatile and investors should be cautious. But this dramatic rise in prices can only be interpreted as a good sign for the crypto market. As a result of the crypto ban in China, experts are expecting many large-scale miners across China to move their setup abroad as other countries welcome the overflow of miners as cryptocurrency prevalence emerges. The founder of a Singapore-based financial consultancy firm Capronasia, Zenon Capron says, "The exchanges have been pushing offshore anyways, and with the exchange business you need cloud infrastructure, you need developers, you need management to move things in the right direction, and so whether that is sitting in Taipei, San Francisco, Singapore or Shanghai, it doesn't really matter. Those businesses are very virtual." Mining for digital coins, the process of using computers to enter bitcoins into circulation and verify transactions in cryptocurrency in exchange for a payout, should get easier overseas as the Chinese exit the market. Smaller operators may be able to mine more easily without having to face the competition of giant Chinese operations, Capron said. After the ban from China, economists predict that countries outside Asia that are more crypto-friendly such as the Netherlands, Switzerland, and Germany are now more likely to establish larger blockchain footprints with international centers for these digital currencies. Most of Western Europe is considered as dominating the crypto market as inflows soared to $1 trillion in the economy. Just to put that into perspective, this amount accounts for almost 25% of all the international crypto activity. According to David Hollerith, a senior reporter for Yahoo Finance, unlike North America, which accounts for about 20% of worldwide crypto trading and has remained relatively flat by comparison, Europe's higher growth appears linked to a wave of institutional investors seeking exposure to the crypto space, especially in DeFi protocols. According to a chain analysis report, most of Europe, excluding the eastern part, is the world's largest crypto economy, receiving $1 trillion over the last year, or 25% of all crypto activity worldwide. The data shows that global crypto transaction volume in North America and a portion of Europe outpaced East Asia, a region that in the past has drawn the majority of its volume from China. To be sure, trading in East Asia did grow but at a much lower rate than other regions. Between January 2020 and July 2021, its growth slid from 31% to 14%, partly due to other countries outpacing the East Asia market. Unlike North America, which accounts for about 20% of worldwide crypto trading and has remained relatively flat by comparison, Europe's higher growth appears linked to a wave of institutional investors seeking exposure to the crypto space, especially in DeFi protocols. Large institutional transactions in parts of Europe such as France, the Netherlands, Germany and the UK, most of all, grew from $1.4 billion in July 2020 to $46.3 billion a year later. The majority of this capital flow was paid in Ethereum, ETH, or wrapped Ethereum, WETH, and Ethereum equivalent traded on DeFi platforms. Matthew Nemer, co-founder and CEO of the US-based crypto startup Linus, isn't surprised by the rise in DeFi in this part of the world. For a time in 2019, Nemer worked in Berlin and said he was originally attracted to the city for its robust crypto scene and open banking laws. "I think European investors have been at least a year ahead of American investors when it comes to participating in DeFi," Nemer told Yahoo Finance. Will the ban by China prompt other countries to do the same? Well, in the US, on September 30th, Federal Reserve Chair Jerome Powell says he, quote, has no intention of banning crypto but said stable coins needed greater regulatory oversight. Meanwhile, according to Michelle Price, a reporter for Reuters, global regulators worry the rise in privately operated currencies could undermine their control of the financial and monetary systems, increase systemic risks, promote financial crime and hurt investors. In the United States, Biden's regulators have launched several efforts to rein in cryptocurrencies. Here's the breakdown. Joe Biden's Working Group on Financial Markets, comprising top financial regulators, is focusing on stable coins, a type of digital coin pegged to traditional currencies. The group includes the Treasury Department, Federal Reserve, Securities and Exchange Commission, S.E.C, and the Commodity Futures Trading Commission, CFTC, but the Federal Deposit Insurance Corporation, F.D.I.C, and the Office of the Comptroller of the Currency, O.C.C, are also involved. During the July meeting, the group discussed the rapid growth of stablecoins, their potential uses as a means of payment, and their potential risks to users, the financial system and national security. Afterward, Treasury Secretary Janet Yellen said the government must move quickly to establish a regulatory framework for stablecoins. In meetings with industry executives this month, the Treasury also asked whether some stablecoins would merit direct oversight if they became extremely popular, Reuters reported. The group is expected to publish a report detailing the risks and opportunities of stablecoins in coming months. U.S. Securities and Exchange Commission. The main action is coming out of the S.E.C. In testimony before the Senate this week, S.E.C. Chair Gary Gensler said the agency was examining cryptocurrencies in a number of areas: the offer and sale of crypto tokens, crypto trading and lending platforms, stable value coins, investment vehicles providing exposure to crypto assets or crypto derivatives, and the custody of crypto assets. Gensler's S.E.C. also appears to be taking a more aggressive legal interpretation of when crypto assets fall within its purview than the agency did under President Donald Trump. Gensler has said, for example, that so-called DeFi platforms, peer-to-peer crypto platforms that bypass the traditional gatekeepers of finance such as banks and exchanges, fall within the S.E.C.'s purview. The agency brought its first DeFi-related enforcement action last month. The Fed's central bank digital currency project. The U.S. Federal Reserve is due shortly to issue a hotly anticipated report exploring the potential adoption of a digital dollar, while the Boston Regional Fed is also working with the Massachusetts Institute of Technology to explore the technical aspects of a digital dollar. While the Fed is on the fence about creating its own digital coin, many policymakers in Washington see it as a critical step in combating the rise of privately operated digital coins. Banking regulators, Sprint team. In parallel, a small group of senior staff at the Fed, O.C.C and F.D.I.C have been collaborating on a crypto policy sprint, focused on cryptocurrencies in relation to the banking sector. Acting O.C.C head Michael Hsu has said the goal of the group is to agree on definitions, use cases, risks, and gaps, and to discuss policy options related to digital assets. As part of that effort, the O.C.C is also reviewing a decision by the head of the agency under President Donald Trump that allowed national banks to provide custody of cryptocurrency. Bitcoin and crypto has long been a controversial topic beginning back in 2009. Several countries have banned the use partially or completely in some cases like China. 1. Iran. Although Iran seems to be having a generally amicable experience with Bitcoin and altcoins considering the fact that to evade the destructing effects from the crippling economic sanctions, Iran turned to crypto trading to be able to manage their imports and have welcomed small-scale miners to their market. However, they ineffectively consumed 2 gigawatts of electricity off the national grid, and to cater this, and had to ban Bitcoin for 4 months until the end of September to be able to power the rest of their infrastructure. 2. Russia. Relations between Russian authorities and crypto are also on edge, and Vladimir Putin has consistently linked crypto with criminal activity in cross-country dealings. The Russian prosecutor general has begun crackdowns allowing the police to confiscate crypto, citing its use in bribery. Although since August 2021, the ban they've imposed over the years has been loosened, allowing trading to some extent. According to a Cointelegraph report on October 12 regarding Russia's response to China's cryptocurrency ban, while Russia continues to enforce a ban on cryptocurrency payments as part of a law that took effect in January, the country has no plans at this time to completely prohibit trading by its citizens. According to a Tuesday report from local news agency Interfax, Alexei Moiseev, the deputy finance minister of the Russian Federation, said he believes Russian citizens will continue to be allowed to buy and use cryptocurrencies outside the country on foreign exchanges without the threat of legal action at home. Crypto payments in the country are currently banned, but Russians have been allowed to purchase and trade cryptocurrencies like Bitcoin. Russian citizens can have a wallet open outside the Russian Federation, but if they operate within the Russian Federation, then they will be subject to bans, I think, for the entire foreseeable future, due to our financial sovereignty, said Moiseev. Other countries including Macedonia, Nepal, Egypt, Algeria and a few other countries have made crypto illegal for a few years, but there has been negligible effects to prices as a result. Anyways, that's about it for this video. Hope you enjoyed this episode. Make sure to show us your love, give us a thumbs up, subscribe, and click the notification bell so you never miss another one of our videos. Also, leave us a comment below with what your views and opinions are about China's latest ban on cryptocurrency. Let us know your top holdings and your opinion on the best coins for 2022 in the future. Do you think cryptocurrency will one day be a commonly accepted form of payment worldwide? What about stablecoins? We'd love to know what you'd like to see next on Crypto Talk. So feel free to leave any video recommendations you may have. See you in the next video.